Everyone is asking the same question again. How high can Bitcoin go? Is it 100,000, 200,000, 500,000? Every cycle, the same obsession. Every timeline filled with price targets, predictions, and certainty. Everyone suddenly becomes very confident, very specific, very loud. And almost nobody stops to ask whether they're even asking the right question. Because how high is the obvious question, the easy one? The harder question is this: what actually changes once Bitcoin gets there? Because the real shift doesn't happen at a new all-time high. It happens after the excitement fades. Price feels important because it's visible. You can screenshot it, you can share it, you can argue about it. But price tells you almost nothing about what really matters. Price doesn't explain incentives. Price doesn't explain power. Price doesn't explain behavior. It only reflects them after the fact. Focusing on price is like watching the scoreboard instead of the game, entertaining, but strategically useless. There's another reason price is so misleading. A price creates illusions of understanding. People see a number on a screen and assume they understand what's happening. But markets don't move because of numbers. They move because of narratives, incentives, and constraints. A rising price doesn't tell you why demand exists. It only tells you that it does. And by the time price reflects reality, the real decisions have already been made elsewhere. That's why price-focused thinking is always late. It reacts to outcomes instead of understanding causes. The real question isn't how high Bitcoin can go. The real question is this: at what point does Bitcoin stop being questioned and start being assumed? At what point does it move from a debated asset to an accepted component of the system? Because once something is assumed, it no longer needs to be defended. And systems that no longer need defending tend to stick around. If you value calm thinking over noise, hit subscribe. We don't chase hype here. We focus on what lasts. Now let's talk about what actually changes when Bitcoin moves higher. Early on, Bitcoin feels risky to own. Later, something flips. It starts to feel risky not to own. This isn't emotional, it's structural. When an asset becomes large enough, liquid enough, and resilient enough, ignoring it becomes a liability. That's when serious actors pay attention. Not because they're excited, but because they're accountable. There's a type of risk most people never think about: career risk. For individuals, ignoring Bitcoin feels safe. For institutions, it eventually becomes dangerous. And at a certain scale, the question changes from, is Bitcoin risky, to why didn't you allocate when you could? That's a very different conversation, one you don't want to have in a boardroom 5 years too late. This is when exposure stops being ideological and starts being defensive. At this stage, the audience changes. Not louder, more serious, less speculation, more obligation. Retail comes back first, not the early believers, the cautious ones, the people who waited for confirmation. Then corporates, balance sheets don't ask philosophical questions. They ask defensive ones. What happens if we're wrong by doing nothing? That single question is enough to force exposure. Then comes sovereign funds, not because they love Bitcoin, not because they understand it deeply, but because scale changes everything. At scale, even a 1% allocation is no longer small. And when capital moves in that size, price becomes secondary. Liquidity, custody, access, those become the real issues. Eventually, states take notice, not for ideology, not for innovation headlines, but because monetary optionality matters in a fragmented world. When trust between nations erodes, neutral assets gain importance. At that point, Bitcoin isn't speculative, it's strategic. And strategies don't require belief, they require justification. This is the phase most people miss because it's boring. Policies, committees, frameworks, no fireworks, no excitement. But, boring is where permanence is built. Big systems don't transform in public, they adjust quietly, and then one day the adjustment is complete. People underestimate boring. Boring doesn't trend, boring doesn't go viral, but boring is where trust accumulates. When something becomes boring, it becomes predictable. And predictability is exactly what large systems need. Volatility attracts attention. Stability attracts capital. That transition matters more than any price spike ever will. We've seen this pattern before. The internet wasn't trusted, then it became unavoidable. Not because everyone agreed, but because opting out became impractical. Bitcoin follows the same trajectory, not as a rebellion, but as infrastructure, slow, relentless, unimpressed by opinions. Here's something most people miss. Adoption doesn't require belief, it requires usefulness. Most people didn't believe in email, they used it because it worked. Most people didn't believe in online banking, they used it because it was convenient. Bitcoin doesn't need everyone to understand it, it just needs to solve problems reliably, and it already does. Most people are still waiting for certainty. They want reassurance, approval, someone important to say it's safe. Bitcoin offers none of that. No spokesperson, no authority, no timeline. It doesn't argue, it doesn't persuade, it simply continues. Bitcoin doesn't wait, it just moves forward. Rather British of it, really. There's one final illusion worth addressing. Doing nothing feels neutral, but it isn't. Not positioning is still a position, one that assumes the current system will continue behaving the way it always has. History suggests that's a risky assumption. So what's my approach? It hasn't changed in years. I don't trade headlines. I don't chase momentum. I don't pretend I can outsmart cycles. I position. I accumulate when it feels boring. I stay calm when it feels exciting, because I'm not reacting to price. I'm aligning with structure. And structure doesn't reward emotion, it rewards patience. So here's the question I actually care about, not how high Bitcoin can go, but what kind of world forms once it's there? What changes in incentives, in power dynamics, in financial behavior? Because by the time those answers are obvious, the preparation window has already closed. Bitcoin isn't a finish line, it's a filter. It reveals who thinks short-term and who understands systems, who reacts and who positions. The price will fluctuate. That part is easy. The harder part is thinking far enough ahead. If this helped you see Bitcoin a bit clearer, leave a like. It helps the signal reach the right people. And let me know in the comments, what do you think changes first once Bitcoin moves higher? Because the real shift doesn't start at the top, it starts after.